At the 2025 Berkshire Hathaway Annual Meeting, Warren Buffett was asked one of the most anticipated questions of the day.
This next question comes from Advait Prasad in New York. He writes, today, Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations, or is it also a deliberate effort to position Berkshire's balance sheet for a smoother leadership transition, providing Greg Abel with maximum flexibility and a clean slate for future capital allocation decisions? And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
Yeah.
And as always, Buffett's answer was both funny and deeply insightful.
Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good later on.
That line drew laughter from the crowd. But underneath the humor, Buffett was making something clear. Berkshire's huge cash pile isn't about making anyone look good. It's about staying disciplined in a market full of expensive assets. He wasn't saving money for a leadership transition. He was waiting for value.
We would spend, well, we came pretty close to spending $10 billion not that long ago, for example.
Here, Buffett's saying he's not afraid to deploy capital. Berkshire is ready and willing to spend massive amounts when the right opportunity appears. But the key is timing. He won't force investments just for the sake of activity.
And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will.
This perfectly sums up Buffett's view of investing. Opportunities don't arrive on a schedule. They come rarely and often when the world is uncertain. That's why he and Charlie Munger always believed in waiting for what Buffett calls fat pitches.
And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50.
This philosophy is pure Munger's. Fewer but higher quality decisions outperform constant activity. In other words, it's better to make a few great investments than dozens of average ones.
And we have made a lot of money by not wanting to be fully invested at all times. And
Buffett has repeated this lesson for decades. Cash isn't a burden. It's a form of strength. While others fear missing out, Buffett sees liquidity as flexibility, the ability to strike when everyone else is panicking. That's how Berkshire made legendary deals during the 2008 financial crisis and again during the pandemic.
The long-term trend is up. Nobody knows. And I certainly don't know. Greg doesn't know. Ajit doesn't know. Nobody knows what the market is going to do tomorrow, next week, next month. And nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about. But it has no value. I've never found anybody I wanted to listen to on the subject.
This is classic Buffett, cutting straight through Wall Street's noise. He's reminding investors that prediction is useless. The real game is patience, not prophecy.
And on the other hand, I've found that leafing through things like that big Japanese book that I can't read anymore, that's a treasure hunt.
This metaphor shows his genuine love for the process. Even in his 90s, Buffett still describes investing as a treasure hunt. He's not chasing excitement. He's searching for hidden gems others overlook.
And every now and then you find something, and occasionally, very occasionally, but it'll happen again. I don't know when. It could be next week, it could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for.
Buffett is reminding shareholders that opportunities always come back, eventually. No one knows when, but markets always swing from greed to fear. And when that moment comes, Berkshire's cash pile will turn into its biggest weapon.
And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years. And then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. If you get to be 115 or something like that, it's almost a cinch.
Only Buffett could compare investing patience to mortality and make it sound wise. His point? The longer you wait, the higher the chance that opportunity appears. It's inevitable, just like aging. And in true Buffett fashion, he ends with humor about Charlie Munger's longevity, proving that even serious lessons can come with a laugh. Warren Buffett's message in 2025 is timeless. Patience pays. Berkshire isn't hoarding cash out of fear. It's waiting for the moment when the world panics and great assets go on sale. As Buffett himself would say, you don't need to swing at every pitch, just the right ones. If you found this breakdown insightful, make sure to like the video, subscribe, and share it with anyone who follows Buffett's investing philosophy. Stay patient, stay rational, and remember, cash isn't for sitting still, it's for striking smart.